Hi, welcome and Assalamu alaikum. Thank you so much for tuning in time. We will start another topic of the day called funding and investment. Okay, so thank you so much. Today, 36th day. So today we are moving to the another level, to identifying resources and to all the resources in a place. We wanted a fund and investment. So that's one of the biggest challenge. Many of the people think I don't get it without fund. Can I do the business, etc. So that's a topic of the day. So thank you so much, guys. I think we are going to have today and tomorrow is awesome. A lot of information and a lot of ideas. And tomorrow we have so many strategies to discuss about raising a fund and capital. And today we'll understand the terminologies and methods and various things and various types of funding sources, etc. They're exactly the agenda for today and tomorrow. So especially this topic is mostly focused on the people who wanted to raise a capital, maybe, or wanted to start a startup, or it's already running a business and you wanted a growth fund, or you wanted a seed fund. It depends upon what's the requirement. That's the topic of the day. So funding and investment for your online businesses, whether it's a small business or a large scale business, a Soho business, or a small and medium entrepreneur, or a proprietorship. Even you are doing sometimes a freelance business, you may record a capital investment, right? Or a recurring investment. So we'll discuss in detail about this. So as usual, we'll take you by slide, and we'll go ahead with 100 minutes of time, and we'll take end of the time. We have a time. We definitely take a Q&A, and tomorrow definitely we have a lot of things to discuss. And I'm sure today we'll have a lot of queries also about various terms, because more on a personalized question will be there, because everybody's outlook about the business is quite different, depends on the vision, right? So we'll start now. So as we discussed about now funding and investment as a topic. So please get settled in. I'll also connect with the PowerPoint now. Thank you so much. Okay, so we will start with as usual. It is we'll go with the one by one, the slide by slide. We'll take you to the program. So once again, I welcome all of you to the Digital Mastery Challenge of 100 days. Today, 36th day. So now we are moving to a next level of identifying the resources I'm moving. So today, 17th of August, 2020, Monday, I'm live from Doha, Qatar, 7 p.m. in the evening here. Now, the topic of the today, we will be discussing majorly about funding and investment. Now, funding and investment, so one of the things, one of the most important part of our online business, or whether in fact, any kinds of business, if you start, that's one of the major requirement of the business, right? Now, do we require funding? That's one of the things many of the people ask. Sometimes many people say, I record funds, I don't want to continue a business. Some people ask, okay, without fund, we'll start. This is also one of the problems. So answer is yes, you require financial resources. You need a funding, right? So for what? That's a question everyone will be mostly asking about. I think it's my PowerPoint is not coming properly. 1 second, let me check it. What is the issue? I'll just reconnect, okay? Okay, right? Okay. So funding and investment, what we're discussing we require the funding, but for what? That's the question most of the people will be asking about. Or what are the things we record the funding? The first thing is actually, you remember that when we initial part, maybe day 1 or 2, we discussed about the step for building the business. The second step is called resource identification. So we need a certain resources in place to funding purpose, right? To running a business, to implement all these strategies or technologies or businesses, or to set up the businesses and running the businesses. We require various kinds of resources in place. So for the resources to identify, we need this funding. Now, if without the resources, proper resources in place, we will not be able to run the business properly. That's one point all of us should understand. No? With a certain minimum things is not there, we'll not be able to run a business. Okay. Now, for this resources, we need a funding. So many people think this is investment for what? So what are the things is required? That's the things is we need to list out, then understand. Okay. So now, for the resources when we want it, so first thing is, before we go thinking about funding, we need to know the list of resources. What are the things I record to run a business? What are the things I record, to run the business, not only set up the business. So setting up the business, running the business, and to understand all the aspects, to running and setting up is very important. Based on that, we need to make a list. So unless you visualize it, unless you plan it, we'll not be able to make the resources part. So, and then we come out of the investment. The many people think the other way. Hey, approximately this much money I wanted, then I start. That's not the right way. I'm not saying you have an accurate account, but actually you need to have almost nearby. You can have a miscellaneous list which is slightly uncertain to us, but otherwise we record almost what I call this resources in place. All the resources list we need to have to continue or to arrange the funding part. Now, list of resources must be part of the business plan. So day after tomorrow, we'll be spending a lot of time on a business plan document. So that's an integral part. I have been thinking about first we do business plan document, then go for investment. But the problem is actually, normally which I did, that's the usual pattern of my training. So people not really given attention to the business plan. But today you'll understand how important the business plan to get a funding. So if you want a funding, the most important part is the business plan. And this resources, all the resources we wanted to set up and to run the operational cost also is a part of the business plan document. Okay. Now, first, and all of the first question, you need to ask how much money do you record? Now, even you meet an ideal investor and come and tell, hey, I'll fund your business. The first question he'll ask how much you record. So that's exactly the answer we should have. We need to know how much the money we record, right? To start up and to run. Okay. Even we fund our own personal savings, we borrow from relatives or friends and neighbors, still we should know how much we record. So this is the fundamental question. But most of the people do mistakes here. They don't do calculation proper. They think I can start with this, but they'll not be able to. So undercapitalization. That means if you don't have a sufficient capital, that's one of the failure reason of the business. Majority of the business you take it, the reason for a failure, they did not have a sufficient capital. When they raised the capital, they did not have, they thought that is enough. They did a wrong calculation. So, or maybe they're not given attention to the way it's supposed to be done. So that was not there. So it is so important to us how much money do you record. Then we need to go for a funding and investment. And there is two kinds of in funding we actually record. So initial investment and recurring investment. Most of the people actually mostly accurately they do an initial investment, and recurring investment they really fail to forecast it. So it's sometimes what the people do to find an initial investment requirement, but they overspend on that. The recurring investment they'll have. That's one of the most common issues. So today I'll be spending a lot of time on this to spend on that to understand about it. Now, the first and foremost, the most important is we need to make a complete list of resources we record run a business. Complete list, which I'll give you a few examples today. And you need to make a list of resources because basically we wanted funding. Even you are not taking a funding, this is list to become important because you need to know how much time, how much money I have to invest to have the resources in place. Even your time you're spending, you need to get paid for. Even you're an owner of the company, there is something called owner's compensation, owner's salary, or you're a proprietor, or you're a CEO, or you are a director of the company. You need also to get the compensation for that as a salary or whatever owner's compensation should be there, right? So make sure that is you get all the list you have it is for before you start up the business or even your existing business. It will always be good to have making a cross check like this and do it as okay. Now, before we go ahead further, so a few terminologies are very important for us to understand. Especially when you go to investment aspect, even you start preparing the document, when you start making the list, when you're approaching the investors, when you are getting prepared to go to the investor, making a business plan document or a pitch deck and everything, you need to know some certain terminologies. So we'll start with that. Tomorrow in detail about so many terminologies we'll discuss about, but minimum thing we'll start today. Then we'll spend and understand the various levels of getting funded or understanding the funding and investment which to implement in our business because you need to get funded. What are the things you record? Now, so some of the things comes in like a burn rate, and convertible note, exit strategy, going public, incubator. All the things is a part of this. The moment you start looking for an investment, these are the terminologies come to you. Then there is an NDA document, there is a seed round and seed stage, there's a 2 stages, on then valuation, then something called tractions and pitch deck. And there is something called investor proposal, investor presentation, there's safe type of agreement, there is ICO, there is a IEO, there is a STO, there is a shares, equities, there's a preferential shares. Like there's so many new terminologies we should be getting to. Now, these are the things today and tomorrow we are going to discuss in detail, and you need to be familiarized with these terminologies. You not only familiarize it, and each and another thing you have to understand what kind of an arrangement you should do. One of your decision may be, makes a lot of things. Maybe it's a lot of difference. Maybe it will be successful sometime. You lose, you do everything right, but you lose so many things, which I did a couple of times, a mistake. So I'll also share with you a couple of the mistakes on it. Now, when you look at it, now we are going to do so many things, like we are going to discuss venture capital, we are going to discuss angel funding, we are going to discuss about the crowdfunding, we are doing a social media funding part, and platforms-based funding, government grants, financial bootstrapping, and incubators, and various other equity or funders. So many options we are going to discuss today. But fundamentally, what all of us understand, most of the cases, these all are human beings. And we are entrepreneurs, and they are going to invest money with us, right? And they have a different perspective. So that's what exactly we need to understand, because they're coming to invest with you by trusting your your skill, knowledge, experience, and your vision, trusting your capacities, your caliber, and your commitment, your dedication. And they are looking to make, usual cases, they're looking forward to make a profit. Why, when I said usual, why there is an investor without a profit? Yes, there are. One of my client, which is I did one of the best client actually, 2 years approximately as a consultant. They were my client, and the investor to the company was not a profit motive. The investor to the company, actually, the company hired me to talk to the investor. The investor about to do a charity work. Okay. So they told me, they're going to do a charity work. So we have a business. We want to try it out for 2 years. We are not sure it's going to succeed or not. Before we want to do a pilot project. So now this person is going to do charity. So you go and there and present them. Now they're going to do a charity work. So here we will employ approximately 200 to 300 people. And especially this project, we're doing a pilot projects, underprivileged people, so they get a job. So it's a kind of a charity. You have to do a presentation. So it is I never did that kind of a presentation in my entire life, because always you talk about the return on investment and how your investment be profitable, and how secure it is, and all the things should be the normal cases. My presentation include to any investors, usually except this investor. This investor, actually, my presentation focus was completely for 2 things. One, during these 2 years or 3 years of pilot time, what kind of a people get a job, what kind of improvement they have, and what kind of a growth they will have, and your money utilized for what, and if this project succeeds, what are the benefits. And even though I had one slide talking about the profit, which he was least interested in, and it was successfully that one, instead of giving into a temple, he is a practicing Hindu, he did not donate that to a temple in a southern part of India. It's a very, very famous temple, one of the richest temple in the world. And he funded for that business. Okay, and one condition he put it, and he said certain percentage of this money to be invested for training these members. So you said you are hiring around 200 to 300 people. You need to do. So this is on one strange case which I'm talking to you. So that's the reason I use. Remember, I always say investor coming for a profit, but actually not true. Okay, there are exceptional cases. There are many examples. Okay, then I started looking at this. Yes, there are so many investors in that aspect as well. But in general, 99% of the time, the investors are looking forward to make profit. And various kinds of a profit. They have multiple options, and they are looking to invest the money and get the much better profit from other opportunities on investment. So there are different investment opportunities. Everyone has it, right? So now, so what we understand is these kind of investors, when we approach what their perspective, why they're investing with you. They wanted a higher return on investment, return of investment they do, and they want a long-term profit, etc. Right? So before we understand our perspective, we look at their perspective. That makes a lot of difference. Okay. So now before we go further, so a couple of things when you look around us. Now, when you look at the larger picture or even a smaller picture, what do you call them, micro level examples in and around us, most of the venture, whether it's a digital or technology or maybe a traditional businesses, usually could grow because they had a financial resources in place, and most of the time through an investor or a couple of investors or maybe a group of investors, right? So you look at the larger picture, and they could, now as an entrepreneur, they had a vision and they could communicate that vision. They could impart that vision. That's the reason they got that kind of investor. So that's the reason before we go to investor, our business we need to do. So anyway, I'm going to discuss with you the different around 100 to 130 questions today and tomorrow. The investors ask. If you can answer that, is you definitely get an investor, number one. Number two, the most important thing, you understand your business better, because investors look in at different perspectives, because that makes sense to us. Many of the things which we have not noticed, you will get it. Okay, so that's why very important to understand investors' perspective. Now, when you look at this larger picture in this world today, you take the companies like it's doing it great now, like Google, they had an investor. Amazon, they had an investor. Facebook, they got an investor. So even some of the things, even a very beginning stage of that investment, they have a different round of investment, right? First round, second round, third round. Before even they're going for IPO, they had a third round, fourth round, fifth round of investment. They got it. And it's very important to have these kind of a round as well, planned way. Now, all the things, when you look back and check this, all this extraordinary successful people, whether it's a Jeff Bezos or a Zuckerberg or maybe Steve Jobs, all these people, they actually communicated to the investors very well, and they're not trying to convince them to invest. They just actually share the plan and the vision. And even not only for a short term. So normally the people go and talk to them 3 years and 5 years on investment, right? Many people, immediately, many of the investors around us looking for a monthly returns immediately. So you look at the Amazon, an example. So you've seen, I don't know how many of you read the emails which Jeff Bezos used to send to the investors. We talk about the very long term, 10 years, 15 years, even to start making a profit. And investors was ready to listen to that. So it is important how we communicate and the kinds of investment we want. Now, so very important part. Now we have a different types of an investment part we are discussing. As I mentioned, we discussed all the major aspects, around 10, 15 kinds of investment opportunities. Investors finding opportunities, a type of investment we are discussing today and tomorrow. But we need to understand all these are human beings. In fact, we need to select the investor. It's not only the word coming from my own experience. I'll tell you a few examples. So sometime initial part, we badly wanted, we frustrated, sometimes we desperate to get an investor, because that the moment money comes, you can do wonders. So sometimes you don't bother what kind of a person is funding your business. But also, before you go to this selection of the type of investment, which is whether you're going for angel investment, whether you're going to large-scale venture funding, or you're going for a crowdfunding, or you're going for an incubation center, all these aspects, the first thing is that all these things the people are involved, right? Even you go to government grants, the person is ultimately taking a decision, or the group of people who are taking a decision to sanctions a grant to you. Again, there's a person or a group of people. So that's an important aspect. So you need to select the investor. Okay. Now I'll pause here and say a few of the important points before we go to getting to the terminologies and other methods. So as you know, from my last 2 decades of my experience, my own businesses, most of my business is funded by someone else. Maybe 1 or 2 occasions, except 1 or 2 occasions, Apart from that, a major portion of the investment of the company from investors. Okay, maybe initial stages, I don't even know how to talk to investors. I don't know type of investors. Then, but still, I had an investor by default. Okay, now, like all of you know, as a consultant, last maybe since 2012, I'm doing for investment presentation or investment arrangement. One of the major things actually I do is, apart from the online and digital marketing, I'm doing funding and investment to helping the startup companies or a growth fund to get it or a seed fund to get them. So this one is actually I'm doing. So from that experience, when I'm looking at this, especially when you look at it, 8 years of experience, I might have met around 300 to 500 investors personally, individually, which is apart from the investors meet and presentation. I'm not counting because that you don't get much experience. But when you speak to a 20 minutes, 30 minutes, 1 hour, 2 hours, sometimes 5 rounds, 10 rounds, 20 rounds of the investors, you get a lot of knowledge. So some of the things which I would like to share with you today, because if the same knowledge I had around 10 years ago or 5 years ago, I would have looked into the things differently. So thus, especially when we start the businesses, actually, we are excited. Of course, that is important for an aggressive entrepreneurship. But at the same time, the investor play a major role. Not only his fund play a major role. And so that's the reason you need to look at the investor as well. Now, we have a great, extraordinary investor I come across. Good investors. I don't name this as a bad. Sometimes things did not work out properly. It's not like business did bad. Even business did well. Sometimes business did bad, but invest was good. It's like become comfortable. So all these things mixture will have. Now, when you select your investor, you need to understand why he's investing and what is the perspective. Now, when we go we discuss our vision, we discuss our plan and method, everything. But here, when you identify investor, you need to think about what his expectations, and that if you can put into his shoes and think what it makes a difference. So I'll really give you real life experience and examples which I had, then you will understand on it. It's okay. Now, I'll start with I raise the capital for others first, then I'll come to my own autobiographical examples. Let's say now here is in Qatar, maybe a year ago. I raised a capital for a working capital or maybe a kind of a growth fund, approximately around 1.5 million Qatar Riyal, for a waste management company. Okay, so this waste management company, when I'm raising a capital, now, so the person who's looking funding is a doctor. So when you look at here, is waste management work, not my cup of tea. Now the company is running, he's not, has never experienced anything on a talking to an investor. His own money, he invested, he built up that business, he's running. Now he wanted to grow, okay? So that's the reason he's looking for. So now the doctor, you look at the doctor, is a waste manager and he's passionate about environment or waste manager? Actually, no. He wanted to park his money somewhere. He wanted looking for a high return of investment. He has a multiple choice of in and around us, right? So now when you look at this, when you connect this dot, so I asked them, so he approached me. The reason he approached me, another client presentation, which I have been doing here. So there he met me. Then that's it. He said, actually, he exchanged the card with me. I would like to meet you for investment person. Then within a few months later, he immediately contacted me. So that's where I connected. I know this entrepreneur. Now I asked him when I started discussing about how you know the investor, because as an investor, because he said, he gave me a list of 20 people. These are the 20 people I'm expecting to invest. I'm going to invite all the 20, and I'm also looking for a few more other people, which I'm not sure. So he did a small investors meet for his own in one of the hotels in Qatar. Around 35 people were there. And his 20, he invited 17 people were there. But since beginning, he was talking about this. I'm looking for this doctor to invest. So I asked him, so how confident are you on that? He said, no, when I did not especially approach him with a pitch deck, with the presentation part. But when I discussed with him, I felt he'll invest. I felt, he said, so on that, in my conversation, I felt he's looking for an opportunity. That's it. but that's turned to be true. Okay, so that's one thing is I have to understand. So there is a connection. When you look at today, now look at any other company. Now, one person went and invested with the $900,000 with Apple Corporation. And when the Apple Corporation, when the Steve Jobs and his team members was frustrated and they don't have money to continue, and they were fighting each other. I don't know if you have seen the movie. So Jobs was talking to so many people over the phone, so many investors over the phone, and the rest of the people are not doing anything. They're sitting and watching movies, that kind of. So he got frustrated and arguing with him. That's the time the investors arrives, and he said, "Okay, I'm looking for this opportunity and investing at $900,000." And that $900,000 changed the world. And they know each other. Steve Jobs looked at one of the list of the people and spoke to them. And he made a call from the landline. There was no mobile landline. No, he put the landline outside his balcony and started calling the people. And that way he got investor, right? Same thing when you look at all these major companies. Look at another Byju's app today. Facebook is invested approximately more than $500 million. Or maybe I think now more than $2 billion. Sorry, the first round was $500 million. Now again, the Facebook is when an investor. He's just a school teacher, and he went so many places talking about his products. People are not ready to fund. And I look at them maybe around 5 years ago, someone comes and say about the Byju's app. I don't even look at, okay, is it a potential business? But today it's a $1 billion company. So a school teacher got a funding, but he tried. That's my point. Everybody to connect to the human being is not. So now we're going to do terminology is important, but the most important part is the communication, your vision. So to communicate to the people, your business, you should know your business model, So these two things, even the school teacher, he said he's passionate about, I want to teach kids, I want to digitally. I have this idea for something called Byju's app. I believe all of you are familiar with the Byju's app. I'm taking it as it is, right? If you don't know, just go and Google it to understand the Byju's app. Okay. So even Facebook funded billions of dollars now. Now Byju's app, even a Qatar Financial Authority, and even the various investors, even initial seed, initial second round of funding, actually he got from Bahrain and Qatar. But he came here and he tried it from India, from southern part of southern India. He came and tried and he got investment, right? And you look at all this example, other people who got funding, whether Microsoft or Jeff Bezos or all these large, even you take a Lulu Group. It's a group of people, a small funding started a kind of a society and kind of a cooperative arrangement. That's where the Lulu started, right? And a few people together, a few expats in the Middle East who working with including the laborers who wanted to have a cheaper products and to accessibility to their product. That's where the Lulu supermarket started, and that's the way that $1 billion started. Now anywhere everywhere, so many parts of the world, it is actually works the Lulu Group, right? So now, what my point is, any businesses in the large scale, if you take it, there is an investors played a more role. It's not only sometimes not only funding. Sometimes many of the business ideas or business thought or come from the investors as well, because that is another component. Sometimes you need an investor. If you go and watch the investors' reality shows like Shark Tank, the Shark Tank, the Shark Tank is a reality show where you go and present and real successful self-made billionaires and millionaires who fund the businesses. On the show itself is fun. I strongly recommend all of you to watch that program, whether it's an Australian version or a US version. It depends upon which one you're comfortable at. I'd like more on an Australian version, but as of course US version also good. So in that, most of the entrepreneurs, especially the successful entrepreneurs who's going for a second round of investment with the giving out a 15%, 20% equities. I mean, they get a 5 to 7 investors funding for $300,000 or $500,000 or $1.5 million. They take a decision based on, I want your skill as well. I want your thought as well. They say, I'll have every 1 quarter, 1 hour meeting. Even entrepreneurs value that. Okay, so that's another point. So even an investor, not only in a kind of a funding part, their thought, sometimes their brand. Sometimes you say so-and-so person invested in. So that also has a brand. That has a value. So and so companies invested. Now, as I said, in a Byju's app, immediately Facebook invested. So that has a value. And plus, there are so many examples the investors, its contribution with the thought. Even so, for example, the Facebook, the initial name of the Facebook was the Facebook, right? Investor changed then made it a Facebook. It's made a lot of difference, right? Facebook. So like that, investors also come and contribute various aspects on it. Okay. Now, another example, if I say to them, sometimes we think it is something is not fundable. We never know. The investors, you think it is not feasible. So you think it may not be workable. You think sometimes it's not there. But the entrepreneur's conviction, the entrepreneur's vision, the entrepreneur's understanding, and the communication from the entrepreneurs to the investors also makes an investment ready. Okay. Now, why I said this one is, it is sometimes your friends and relatives, neighbors and acquaintances and online friends tell you don't get funded for this. It's not true. Even I said to many people, you don't get a funding for this, but people raise a capital for it. So you as a person and the person who is communicating to the investor, is make another huge difference on it. Okay. Now, I will move on to another real one. So actually, as a person, I told you, I raised the capital as an angel funding. I also approached the venture capitalists for my clients, and I myself, one of my partnership arrangement funded by a venture capitalist. And many times we are angel investors, and of course the crowdfunding also we tried. And many of the clients, which is actually I did a government grants, because that's the place actually they wanted basically a consultant help apart from the angel investors and venture capitalists raising capital part. Okay. Now, all these experiences, when you say, even I know, tomorrow I'll talk to you in detail about that, why an investor say no to you. Okay. In the world statistics, it says only 7 to 8% of the people, around 7.3, 7.4% of people only get funded. So that means you need to be on the 7.3%. You need to consider a few of the things. Now, so today when I'm talking to you, yesterday we discussed about affiliate business or a flipping of the business or e-commerce business. I'm not only talking about that perspective today. So today you may start just like an affiliate website, maybe just an e-commerce store. You may just start a drop service. Maybe you just start a YouTube channel. You must just started a kind of a services company. But tomorrow you will grow, right? So in that growth stage, you'll have enough funding and investment requirement. Why that is important? Because you want to grow to a next level and you have a great opportunity. Many of the people think it is initial stage you need investment. According to me, no. Once your business is getting on a track, that's the time you need a larger investment. Of course, it depends upon the business how you structure it, but especially on a startup businesses, especially on online businesses, especially like a business models, which we have been discussing during the 100 days, like a e-commerce business or affiliate marketing or a dropship business or drop service or a YouTube channel, whatever we discussed. Most of the business initially you may not record because you're a financial bootstrapping or you're on savings or maybe little small borrowings. Is maybe enough. But the moment you want to expand that business, you record an investor. Now, part of during the 100 days of challenge. So one of the most important things, all of you know, in the championship period, in fact, end of the championship, our program is investors program. I hope all of you remember this, which I talked to you initially. It is, that's the time we'll be talking to so many investors. And all of you get an opportunity, those who have a project and participate in the championship, you will get an opportunity to interact with investors. So this is a foundation for that. So you need to make it. This today and tomorrow. So spend on it. Of course, again, September month, again, we'll be discussing about a few things on a investor related. This is 2 days is today, and another 2 days we are going to do. And then one more day we are going to do just before going to investors. So total 5 days we'll be discussing about investors aspect. So today, please note down many of the things which I'm speaking to from my own personal experiences. I've not put many of those things on a slide. So understand, take it for many of the experience on part. Okay. Now, if we are using someone else like me or some other consultant for raising the capital, so you need to understand again, you are involving another third person. So now you communicate to an investor understand you through a third person understanding. So going in, there is a high possibility, something called lost in translation. You know what is lost in translation, quote and unquote. Lost in translation, you communicate it to me, then I communicate it to them. That's quite challenging. So that's not only that the third party, when you involve. For example, you work on a business 1 or 2 years time, maybe 6 months time, maybe 3 years time, 5 years. I mean, I've seen the people work on 12 years, then go for finding an investor. So in all these cases, you putting a lot of time and energy on a daily basis, not only in the official time, even unofficial time also, you keep thinking about your business and you have a focus, you interacted, you tried, you experienced, and you also understand the competition, you know what works, what not works. All the things is happening around you. And now that to another person you hire, maybe hourly basis, and in 2, 3, 4 hours, he may not really understand what you're planning. So that's when you're using a third person. Like, so my recommendation, you also involve even a representation round. You know, your presence should be there, then you understand what is happening. And of course, for making a pitch deck or maybe a presentation document or maybe a business plan document, of course, definitely that you need to have. And even you have a perfect one, please give to the investors. Sorry, investor presentation part in a proper mark. So one my point here is actually your vision and the problem you're solving, your business model, and your numbers, your capital, what the money for what purpose is money required, how much money you require. Everything should be very clear. Even you, without looking to the papers, you should know the numbers. And that's what exactly an investor, when you look at you, to realize it. That's exactly the reason I told you that 30 reasons of angel investors. There are a few 100 to 130 questions we deal with today, and I'll go ahead with that. Okay. Now, another thing is, I'll tell you, there are a few things, how we look into. So, as I mentioned, it is for the last 2 decades, I did various businesses. And when I never knew, when I was thinking some ideas, some thought, I'll have that investor. I don't have that investor in picture. But the investor arrives. You meet investors. That's a miracle of this universe. So that's what you believe it is. You start thinking, you start making a plan, you start giving a focus, and investor arrives. And you have to meet, you start focusing. And you're planning to, that effort should be from outside important. And you think it's, no, I don't think so. For this, such a small business people fund, then you should not do that business because it's a small business, right? And even for a small things, you actually got investment. Even if it's a small, but you have a potential to grow. The point is, even if it is a small, potential to grow. That's the point. If there is no growth opportunity, even if you're a large business, no growth opportunity, no investor. Even if such a small thing, you have a growth opportunity, people are going to invest on. Okay. Now, a few example I'll share with you. Now, one of the things I earlier one time I shared with you little, now I'll tell you an investor perspective. When I was running with my partners on a grocery selling online e-commerce websites, so we had always an issue of getting, we don't have sufficient capital, especially we are buying the grocery in advance, paying the money in advance and getting a price advantage and delivery. So when that kind of investment put in that way, and expansion to the one city to another city was always expensive. So initial part, we never thought that kind of a growth we get it. We got a good growth and a fantastic growth and good response, and we are making good money. But the problem is actually every day the cash flow and bringing the, adding the more and more products and variety of the, especially the grocery units, there are so many varieties of the products to do and vegetables and everything is there. And sometime in the farmers market from the farms itself we source, and to get a good price, then we need to and put in money in advance, and there is a rotation money required. And this was not happening, even though we are expanding to 4 cities, 5 cities. I was one of the in charge of another city. So that's the time we got a venture capital. And you asked me that, that's one of the things which I thought is in my life, it was a fantastic blessing as got it. But that tended to be true. That entire the business too, from that business, me and my friend, majority of the founding partners exited because of that venture capitalist. So when you take it, that's the reason. Sometime when you take it, I'm starting at the Pacific Store. When you take a larger note with one of the largest industry, I don't want to name in the public program, the company's name is one of the largest industries, largest corporate company, who invested that time. It was not that big company, but of course they were a bigger company. and they invested almost $500,000. I'm talking around 20 years ago, around 18 years ago. It was a very good money to fund a grocery business. But also because of the venture capital, there are a lot of rules which we don't understand. Which we don't understand means which we are not planned. But when you want to desperately money, something you flexibility. So that's one of the things please don't do. Okay, so because you have a vision, you're going for a plan, and so investors' perspective is this affecting the business, please don't do that. Again, this is one of the mistakes I have done. If you ask me now, if the reason for online shopping mall to come back, because I still feel that's an unfinished innings of my life. Actually, I had a great opportunity to great outgoing at, but an investment which I had taken from a wrong people. It's not say wrong, it's an inverted comma. For me, it was so one of the reasons. Okay, that's one example. Now, this when I happened to me, when I noticed it is so many other people also had a similar experience. So that's the reason select your investor is also important. It is, we think, if you ask me today, I never take one investor, yes, I'll wait for a few days, because if that investor said yes today, instantly within 1 hour he replied, yes, we agree. Okay, because that's what is desperation and if you don't know this. But actually, please try to understand the investment opportunities are plenty in the market. I mean, investors, to get investors is a plenty. The market is full of investors. That's what you have to look into. And sometimes your business not getting funded, that many people say, that's one of the challenge. That may be one of the reasons maybe your business is not feasible. That also you need to understand. I'm not saying all the cases. There may be, and many of the investors are not appreciating your projects. That may be other reason. And maybe one more reason is, actually, I'll tell you another reason, which I worked for one client in UAE to raise a capital for a good company, good online company, and they even a TV, television, they're doing a very good online sales. But he wanted a seed cap, growth fund. So the drawback which is he created is not his business. His business is good. Scalability was there. And the exact time, the Amazon acquiring a Souq.com, it was a lot of positive sense was there in the UAE market when the Amazon acquired for $700 million, the Souq.com. So that's the time he's going to various investors and doing. So I met so many investors for him. And the drawback was he went to too many investors. And because usually the investors knows each other, especially when that circle of he planned to have an upper middle class and those who are doing a corporate company, he went to that kind of a people. And and they talk each other. And so many people he went and it just knows each other. And too much of approach also not good. So sometimes you have to select a few people and wait for that. Then we go to another one. So what he said, okay, I cannot wait more. So I go on a daily basis, 3, 4, 5 places a day, people, and keep doing a appointment. And it's also spoiled. That's also not a good approach to do that one. Okay. Now another example, if you take it, is for consultant perspective. So I'll tell you that a jeweler who started with one outlet, went up to 100 plus outlets, maybe in fact more than that now, and plus in a lot of countries expanded. That jeweler, when he started with one outlet, there was a consultant, and he did a fantastic thing. The consultant contributed for a branding and strategy aspects. And after a few years, I mean, few years means around almost 2 decades later, I mean, around 17 years later, that's the consultant said, no, I'm exiting from the arrangement. You know the reason, he said. So for that businesses, for the jeweler businesses, jeweler always had an investors from micro and macro investors, large and small investors. And now 17 years later, the consultant exited, a very reputed consultant, very talented, very experienced. Even I'm looking to his capacities and skill and his style, because he successfully made so many bigger companies. He exited the reason because that company borrowed loan. He said, you're taking a money on a loan. This is not as per my plan. My strategy is gone. So why I put this was, most of the time, including me, initial part, we think about easy to get funded bank loan. But for entrepreneurs' point of view, I'll tell you, friends, it's not a good idea. Especially the startup part, definitely not a good idea. And There, of course, I'm not only talking about ethical and religious reason. When a business logic wise issue, so if you ask me, that's another big mistake we did in the beginning of my business. I took a lot of loans and on a risk, and things goes wrong. Bank know that they are not your friend, right? It's not an option. That option if you should be get away. So when you're this, you not even treat as your investor. It's not your investor, okay? And your banking transactions, maybe transaction you may be record, but especially for your starting business, especially for your to growth your fund you wanted, get away from that's a so I personally I don't recommend at all that part, and it is actually you may succeed. I don't know if it's not so many business successes, but actually when you look at it is now if the world is full of opportunities, full of investors out there, you need to look into the various options of finding an investor's part. Okay. Now, when I said to look back into the investors part, 2-3 examples, I'll tell you how the investors arrive as an example. One is, of course, one of my first set of investors. When I look at my childhood friend, childhood friend is my relative, and he funded my first business. And within 1 year, this was such a small amount. It's not a large amount, maybe less than $400. Within 1 year, I could pay him back around $2,000 to $3,000. My second business, even before I presenting to him, he knows that as I'm started working on something new, he came back and invested. Okay, so that's one of the things all of you should look into. So you need to have that credibility to build up to move forward. Sometimes it may not be possible because all the businesses will not succeed. Sometimes all the venture will not go, but overall time, so how you do that one. Okay, so in both cases, when you look at the first one, maybe over a cup of coffee, which I discussed, I said, if I'm planning to start something, this is what I wanted. Can you do it? It's not even a paper presentation. So he asked me for what he was money, but I said, oh, so that's actually company. Basically, I wanted to assemble a computer and sell it. That was another idea. So I said, actually, I want to buy this from the Sun Society and bring here and do it as this is self I wanted to. Then I can roll that same thing. So then actually business expansion. Then actually I partnered with another company. So there actually I do not have an option to take another investor because they already had an investment and working. So I said no to him. But actually after that, when I started individually, I to have it as. So this is one important. Of course, actually when I look back 20 years later, because that funding, even though it's $300, $400, so much of difference happened in my life. Okay. Now, another one more examples I'll tell you here is actually, so sometimes you happen to meet as such a wonderful investor as well. And one of the best investors, actually, I tell you, then you'll understand how is so one of the best investors. Now, after a very long period, my hometown, I had never been there, This was my wife's maternity period. I forced to be stay back in my city, for the maternity purpose. So I happened to meet all my old friends and many people. They never attended my workshops and my training programs. So they know that I'm doing in various cities and countries. So they pursued with me to do a kind of a workshop. Anyway, you're here for 3 to 6 months. Why don't you do it? So we actually, for them, actually, I agreed to do a workshop. Basically, I want them also to go there because most of them entrepreneurs, they're not digitalized the business. They're not using many of the other aspects. I thought, okay, we'll do it. And that's one of the best workshop I ever did it. Is in a different part of the world. Maybe because I had a lot of passion to do. Is my hometown with this. So there, actually, the investment that one of the investor who funded the business called, I think all of you know some of the company called Sign, because that time I have been working with the one like online shopping mall. There is a company I formed with the Brand Consulting Corporation. So there, actually, they said, okay, this model really worked. I wanted to. So I said, no, I'm working for this online shopping mall. It's a larger project, which I told you about. When I got a venture capital, I feel it's unfinished businesses. I wanted to continue this one. They agreed to say, oh, Shan, you communicate that one, you go ahead with that, but we will work in a workshop and a few other business ideas we'll do, like an affiliate platform, etc. Even those, I know many things that's a planned way did not work out with that business. It got ups and downs. So many things, somebody's expanded to so many countries. There is an enterprise version, there is a different, Dubai, there is a version, there's a different version. So many things. But that's one of the best investor, I say. He understands and he works on it, and he appreciate and he control it. And so, but actually, I told him that is actually, you're just an investor. You're supposed to be the CEO of this company, because that kind of a contribution comes on it. Okay. Then when I continued and pursued so much of different opinion with as a company, with other company, because we merged with so many different companies together and come into the board. But that investor united us always. He put us always together. So what my point here is, before we go to the terminologies now, it is not about the funding alone. It is you're bringing a person to your life, your person bringing to your business, along with the financial resources. This I want you to register now, because we are completely going and discussing about the terminologies part. Now, keeping this in mind, now when you wanted to resources to identify, you need to go back to your business model. I think all of you remember this. This is a business model where organization, strategy, and technologies. Now, what are the organization list? So when you make a business part, when you wanted to have a list of resources, so all the three aspects you have a resources, right? You have technological resource requirement, you have strategic resource requirement, you have organization resources. Now, organization resources, one of the major investment it's making it legal. It's include a lot of money, right? Even sometimes you start an affiliate marketing or business, you may not record a company, but still you record a bank account. So there is a small, but there's nothing else is required. But most of the other businesses, you have registration and incorporation, and that's one investment. Then you have something called business plan documentation. So most of the time, you might depend someone else to do that for you. You may not be doing. So maybe a consultant, maybe a chartered accountant, maybe an online. Now there are so many options online that can be plans, but still you have to pay money for it. So that's also in a listed there. Now, incorporation of the company, usually we do with a company secretary and the CA. There is a charges is going to come. So this also should part of the list which we make on a business plan document. Then technological requirement when you look at it is a domain name. It's a sometimes you have to buy a premium. It's more expensive. Sometimes even though you have one domain, you need to protect, so many other brands, like your other TLDs, other geo TLDs, plurals, singular, and common misspellings, keywords. It's not $112. Sometimes you need to have this one, right? So when you really look at how to have a long-term vision, you need to have this one in place. Then the most important part is, if you're starting with a long-term vision, and that is the how the branding part is, how important it is. So you want to know your corporate identity and logo. That's a very, very important part. You need to do this one, and you need to spend time and make it ready, especially tomorrow if you're going ahead for a larger vision you have. You need to spend good money. The logo sometimes you can buy for $50 online, but your corporate identity should not be done that. I prefer you to have a kind of a corporate identity with vision, and to start with that. Okay. So this, for example, I'm showing to you an ADM part. When you're doing a corporate note, all this is an evaluation of the branding, how we came out. Okay. So it's so many things. And now even when you look at the font, even you look at the color, it is not just simply someone designed. There's a thought. You can see this is a part of a corporate identity. And you need to invest on this, even sometime in maybe $5,000. Depends upon your vision. So this is a major, because tomorrow if you want to have investors, one of the things, if initially the investor look into your corporate identity, your logo, the way you're presenting to the people, your look and feel of that one, and the font you are using, and why that's significant on that one, and vision presentation on that you should have. This is a part of your pitch deck document. When you go to an investor and present this one, you need to have this also with you as a corporate identity. So this is a recorded resource. The first time, and I'll tell you most of the time, you should start with your own bootstrapped or your own personal finances. You may not spend this much time. The problem with that, you lose a lot of investors in future. And that's the reason. Maybe initially you might compromise, which I don't recommend, because sometimes I fail to convince many other people you record a good corporate identity. And people say, why should I pay? If I get a $50 logo in Fiverr, why should I pay $5,000? It's so very subjective. Okay, it's up to you how you look at it. Now, every company's corporate identity is very, very important part. How your business cards look in. Because when you go to investor, one of the things you exchange with them is his observation, his initial discussion, his initial thinking, in fact, his decision. You ask me, I believe in 2 minutes time, people take a decision, right? That's what I believe in. I talk to you in the decision-making process. The people's subconscious mind take a decision on that. So you need to have, this goes well with that. Then your envelope, your letterhead, and your other, like your pen, something which you are presenting about here. And even you go to the investors tomorrow, you have something you give it an envelope, maybe a hard copy you give it, or maybe something you give it to your writing pad, and maybe your employee ID card, sometime, or you go to an investor, maybe wearing that one to show your professionalism. And you send to a pitch deck, you give a business plan document, your investment requirement, you give through a slide, which should be professionally done, part of your corporate identity, instead of a third-party PowerPoint, what you're doing it is. Now, you also should show to an investor a large vision, how this is look like, okay? So it's a part of a corporate. So when you do a corporate identity professionally, that company will be able to give you that one. So otherwise, on the pitch deck time, you show that entire the vision which I talked to you short while ago. Your vision, you will not be able to share with these people. And show all this corporate identity, how you present your brand to the world, how you will communicate your brand to your consumers, your potential buyers. That's very, very important part. And it's also important to have now all those things to show to the people on that way. And then after that, once you have a corporate identity in places, you also should have this recorded as and a bank account. Now, to transaction to happen, right? You record a bank account, and you also record licenses. Then office infrastructure is part of your, company, in legality, setting up your organization aspects. Then we go to technical aspects, right? So you have three parts: strategy part, technology part, and organization. So these are the things usually an organization part you need to have with you. Then when you go to a technical infrastructure and a strategy infrastructure, again, there's a huge list. So you need to have this list with you to make the list, to resources calculation. Your own website and mobile application. If you have a website, I'm a mobile app, both or only website. And what kind of a promotion you are planning to do, how you are planning to source the products, and what the investment required for a products. And you're using any CRM platforms and the CRM tools part. And you're doing an SEO, especially you're doing an online marketing. So your Google search, search engine marketing, and then your how you're planning to tap that one, and how much money you're spending. If you're doing a remarketing or a retargeting, that one. Then email marketing, and email marketing and all. Invisible, there are recurring investment a lot. The $100,000 to $500,000 in a month, you may not be realizing it is. Small money is actually more number of growth you have. You'll have a email marketing expenditure increasing, and it's not that you send out an email this month, the next month you get a return on investment. No, you need to continuously do email marketing over a period of time. You make it. By the time you'll exhaust, even you start with a small and medium investment. Then social media. How much that social media nowadays, not unless you spend properly, you cannot actually grow, right? And you need to classify all this part in a blog and social media, how you spend on it. And Wikipedias and all of the things, how you place it and how much time and money you are going to invest on it. Then you need to automate your marketing part. There are a lot of automation tools these days. Most of the projects come as a SaaS. So you need to have a investment for that. Then you have a complete tools. Each tools maybe cost you small money, but in a month, it's all the thing you integrate together, coming a good number of invoice. So that's also part of your resources list. And then various CRM tools and conversion rate optimization tools, and all the tools is part of your investment. Sometimes even to the initial part, or maybe you can also make it later, after some time, the growth fund like this is also possible. Now, content management, that's an important part of your online business. So usually that content is your display, right? In the physical world, people say, this is my showroom, this is my showcase. So the content is a showcase for you, should show that one. Then there's a mobile marketing. So there's another investment comes in. So all these requirements based on your strategy, based on the technology, this will be changing. Now, so based on the business model, it will be, done as a separate layer. Now, based on a business model, when you say, you need to look at it as how you placed it. Based on that, this investment comes in different way. But you major part, any kinds of business, you'll have, especially online part, you have promotions, campaigns, and communications. So that's also required. Now, tomorrow you are planning to do maybe hiring an employees. Of course, there is a salary, or you are hiring a freelancers. There is a fees. Sometimes you do a commission basis. There's all the things. This comes on another requirement of investment, right? That also is a part of the list. Then your stocks and inventory. I don't have to mention that. Normally we don't need to forget that one. But there is something which form out something logistic arrangement, and there is a arrangement tie-ups, and then there is a packaging. Then there is the issue with the connected to logistic. Also, we need to have an invisible cost also to be added with the business plan and resource identification. Then go to the business plan document. So all this again will change, depends on the business model. Now, once you made this one, how do you get funded this one? So when you're getting funded, something or a startup funding we can have, and there is usually around 10 different ways we can actually raise the capital for a startup. And depends on your business model, because it depends on your vision, depends where you are. This will change, and what kind of economy you are there, that will change. What kind of people you are connected with also will change your priority. If you ask me, one of the best priorities is angel networks. Angels, investors are the best one to start kind of a small businesses. So angel networks is one of the best one to start. We'll discuss about how the angel investors will deal with that. Okay. Now, another thing is which is very common nowadays. It's a crowdfunding, especially for you are looking for a $10,000 or $50,000. This is a fantastic thing to raise the capital, any kinds of capital, crowdfunding sites. And we will discuss about it. I think in the campaign time, we are going to do a campaign also to raise a crowdfunding part. Okay. And you get a lot of access to the crowdfunding nowadays. Now, apart from that, we also have incubators and accelerators. So now every country, this is a great opportunity now. So tomorrow we'll discuss in detail about this as well. The incubators and accelerators by the government, so various, even the private companies fund this one. Like a Honda, there is an incubation program. And so many other companies and educational in universities as an incubation program, business school as an incubation program, and governments as an incubation and accelerators program. So that's one of the places you can go and do. For example, and they'll fund with you. They'll fund your business. Not only that, they also provide the resources like office space. They also provide maybe sometime some of the country. You show them like example. I tell you in China, there's you as a foreign company wanted to go to China and start a tech company. There is an offer. There you go and show in your bank account the salary for the next 1 year. They will give you plug and play offices. So that's beautiful. It is. The same thing was there. You can also see in Chile. There is a Chile. You go with $100,000, but you have to move there and stay in 6 months. Then they'll also fund you. So this is another way of getting it's a funding part. And so this is actually all the primary and initial businesses. This is a good one. Okay, and there's a small administration method of that you to go through. Then there is a professional and social networking side. This is quite new. In a various website now you can raise a capital. Through that, there is a group of people gives you the money, like a Zing and Blackso and Startup Nation, eFactor. All these companies actually can raise a capital. It's slightly different from crowdfunding, because crowdfunding a large group of people you do. This is a multiple people you deal with, but sometimes even a meetup or a co-founder also gives you capital nowadays to start with. Then, of course, the private equity firms. It's a very common. People invest money with you as an investment companies and do that. Now, we also have something on online lending platforms now. So where you can go to various platforms and ask for money, and they'll invest with you with that one. Then sometimes through our personal marketing effort, you reach out to another personal contact through another method. And friends and family is always another source of getting funded initial stage. Okay. So, and another thing is a launch platforms. It's a startup launch platform. There are so many events and functions, and you participate in that, they'll fund you. So there are many, we never know where we get this opportunity. Across the globe, this is a very common scenario nowadays we have. Now, you will also good thing about all these platforms or accelerators or government grants or incubators. Even they also process your business to make a fine tune for a greater success. Something which you are not noticed, they will bring to them. Some professional touch they will give you. So this also is a part of it. Now, so various companies like startups, they'll also give you location for various investors to get in a more efficient way for you to get. Most of the things, which is the important part is we have various sources. One is basically something called financial bootstrapping, which is we are spending a lot of time basically how you bootstrap your initial investment. Then you go for a investment. That's one of the most common method and a sensible method, especially for a startup company. Now, especially in the COVID-19, this is the way you can start, then get funded for it. Then you can also go for a venture capital. That's a quite larger amount. The one misunderstanding about venture capital, people think about only for a larger companies. Actually, no. Even a smaller companies, venture capital fund. And it is long term, if you are looking, they are the best people. But of course, they take out a lot of stake and equity for a company. That's one of the things. People raise the capital through the companies like a Flipkart and Snapdeal is the best examples. Now, angel investors and crowdfunding also, people actually also fine tune the one. And crowdfunding platform, when you go, you have to transparently, you'll be showing to them. That's one of the drawback where you have to reveal so many things. But it's not how to worry. So, for example, many of the people I noticed when they contact investors to share a proposal, I want NDA to sign, which is it's not that easy. Number one. Number two, many of the investors may not be signing an NDA with you. If they'll not do that one most of the time, especially in the first stage. There are many entrepreneurs comes to me and say, I don't want to reveal my idea to an investor. So that actually it's not make sense, because the moment you start, your idea is out, right? So NDA is actually from an investor side, maybe a second round and third round will be possible. First round be when you share in the pitch deck or a presentation time or initial document. It may not be feasible for you to get it done. So don't look at that, but you need to very smartly present reveal with no reveal. Some sources, maybe some kind of formulas, some kind of something which is you wanted to hide it. Still, you'll be able to hide it. Sometimes you say this portion I can only reveal, because when everything he liked it, this portion expansion is possible. In the second round, you can add in the document that way. But initially with ND only sign it. Because many of the people, I don't work with those kind of clients, because I feel it is investor's point of view, it's not feasible for him to go through an NDA of 4 or 5 pages for just to listen to our concept. He may not be doing that one, right? Okay. So a lot of platforms like social media, crowdfunding platforms, like a Kickstarter platform you can use, and you can register for your business and get it done. So that's my point here. You have to reveal that's a drawback, but you get a good number of investment to raise on it. Billions of dollars these platforms will raise with starting investment range of $10,000 to $50,000 part. Now, this platform is something very popular, but everybody has their own pros and cons and fees, etc. So based on what you comfort, you have to choose and start doing it. Okay. Now, almost the same platforms, all the nature is the same, and all the processes are the same. And there are a few things which we should be careful before we are signing the agreement with these crowdfunding platforms. So you need to go through and take that decision based on what kind of money you are going to raise the capital. Now, some of the when you look at the crowdfunding platform, good thing is we connect with so many people, and when we connect with from a different countries of the people. And this cloud platform will really help us to reach out to the many people in such a short period, and we can actually continue the discussions there. Now, Patreon, as we discussed over the YouTube channel, so many of the influencers use Patreon as their investment opportunity. The people get funded Patreon. You want to create a YouTube. Now, for example, if you are looking for a YouTube channel as a business, I think you remember that we discussed this point of the YouTube Master Time. The Patreon is an example where they give you money to make it. You can raise a capital to trust, even to make your videos. If you're a social media influencer or you have a faceless channel, in both cases, you can use a Patreon to raise the capital for even one video making. Okay, you may not record a huge money for one video to make it, but that also you can raise. Maybe you say this series of this topic or this niche, I'm looking forward 100 videos to make it, and that you can raise. Or you want to raise for one video is also possible. And many of the influencers very regularly use Patreon and get the financial resources in place to run it. Now, GoFundMe is also giving an option, same way, to raise the capital, and various level you can raise the capital, and they charge only less than the 10%, some case 3%, something 5%, and and plus even through donations you can actually raise the capital. So people donate you. So one of the methods. Then CircleUp is another website where you can go and raise the capital for even a small ideas they'll support. And there are different kind of offers they have. And there is a Lending Club is another example where you can register and get a different kind of loans. But you remember that is no collateral. And you can also waive off the interest and talk to them for even though it's a loan, and a different way you can do that. So like this, you have so many opportunities when you look at today, where earlier we don't have. Now, when you look at today, the governments, because of COVID-19, that is small and medium entrepreneurs across the globe getting funded from the government grants. Not only a startup, especially if you are a started up kind of a business, you are not able to further proceed. So you can get a lot of government grants. Even the COVID-19, many of the countries started giving money to pay the salaries to the people. So many of the entrepreneurs got a working capital. There is another grant. 6 months of time, the lockdown, or 3 months of lockdown time, they give you that money, plus there's another 1 year grant. So it's the right time. Look to from the government grants in different part of the world. And the government really wanted to support the entrepreneurs because they are the people who create employment, and the employees get paid, and that money should go to the market to revive the economy now. So that's a very good time. If you know any of all the kind of government grants, you can approach and do. Another, of course, you can go through investors meet, various kinds of investment also. It's very important to participate and get it done. Then another one is actually when there's to differentiate, you have to have two kinds of money. One is a startup capital, one is a seed one. Growth fund. So one is a seed, one is a growth. Okay. So initially you wanted to have a startup capital. How much what are the things you wanted to have, make a proper list, and through a business plan document you need to communicate to the people. Believe me, with just a paper alone, sometimes it will be challenging for people to believe and trust. That's the reason I personally recommend to have something in place. Some companies even say you need to have prototype. Sometimes in the online digital platform space, we may not have a prototype, may not be possible, right? For sometimes some of the products. But if you are a website oriented or affiliate business or e-commerce or a drop shipping or a drop service or any other service providing thing you are planning to start, then not just a business plan, at least a small level, you need to create something and show the traction to the people. Maybe a pilot you should do, and sometimes license you occupy. Now, all the things is an important part. And then go to angel investors or other thing. Okay. So you make sure that is when you meet an investor, all these people, they have a key takeaway from what your tenet is in this one. Okay. For a venture capitalist or an investor, you do it. If it's a venture capital, you need to show much bigger picture, larger scale, long term, and you get a huge money as well, right? As we discussed about it. Now, the word nowadays is a startup, and to fund the startup, we have a lot of startup capitals now, and it is they fund the startup. That's a good thing. Usually, many of the people actually, as I just mentioned, just without seeing anything to fund, it was usually a challenge. But the world has changed now. Even you get a fund for the people who founded, as a friends founded, a few colleagues founded the company, and you get funded from these kind of companies. And they basically, they pay for setting out the offers and the licenses, inventory, and manufacturing something or creating something, and marketing and pilot project and testing, plus even their directors or the founders' compensation of the salary, your car, your house, everything will be taken care of the kind of a money plan. Now, even if you choose startup, you're looking for a startup as a capital. So there are business loans, which is, as I mentioned, it is as a technology. Technically, this is one of the common things which people do, but I personally disagree on it because I believe it is, the entrepreneur is taking a risk. Even investor should take a risk. Okay, so there you need to. That's the bank usually don't take a risk with you, whether you're making a profit or not. They look for their capital to get back, right? So that should not be ideal. Now, startup capital and seed capital, there is a two things which you have to differentiate. So what is startup capital is basically come from a professional investors which we are getting, and usually can be from from friends and family. Even the seed capital also can be from your friends and family. So it depends upon how you communicating, the kind of network you have. Another thing which I forgot to tell you initial part, usually the money comes from the non-people, but unknown people also is an opportunity. But unknown people, you need to have more professional approach. Personal, other one is a personal talk is more than sufficient, right? Now, venture capital, you need to approach them with a written notes and do that. And all the companies like Google, Facebook, all the people got the money through venture capital, and they also, that's the way they grown with that. Now, seed capital, what is exactly in the seed? When it says a seed, once you started doing something, but to expand, we're going for a growth fund. But initially itself, you wanted a fund. It's actually you also get a seed capital from them. Okay. Now, this is when you look at the takeaways part. When we raise the capital through the seed capital, and make sure that is the basically second round. When I notice as a seed capital, people don't really spend on what they wanted, but they show some strength and spend somewhere. This should not be there. It should be normal. As in the business proposal, it should be mentioned the money which you are raising from the investors, you spend on that one. Okay. Now, angel investors is come and invest for a seed capital, and the seed capital, and you'll have a clear understanding of what are the things you need to have it on the seed fund and how you source, and you need to measure the part. Okay. Now, usually this kind of thing is a bank don't fund, so please look at the bank to do sometime without any collateral to do. So don't be dependent on a bank on that. Okay. Now, not necessary to have a large money, even a small money you don't have it, you need to look into. But in all this aspect, when you discuss, according to me, angel investors are the best. It's my personal experience has been. So now in angel investors associations or a lot of angels around us, we can reach out and do. But the most important thing is, as I mentioned, we need to have the answer of the many questions which they ask. So according to me, around 30 questions if you can answer. First, you can, your possibility of you're getting an investor easy. Second, you will have a clarity of your business. Even you're not going for investor, you treat yourself. You're investing pretty. You maybe your savings. You're borrowing, or maybe someone is lending in the money. Maybe your friends and raise eaters again. So are you think as a for some time as an investor for this, and are you going to be part of this? So think about that way. So now that's the reason tomorrow we talk about something called a pitch deck. We'll discuss in detail. Now, so try to understand a few questions they ask you. This is a very good relevant question to ask you. That's your thought. They will really check it, and investors knows what to ask. Investors know how to verify, because as an entrepreneur, you make a business model, you make a strategy to reach out to the consumers and to buy the product from you. Here, he will think about running that entire aspect. He'll think a much helicopter vision. So there, he will. One of the questions which is very commonly asked by the angel investors is, what exactly the problem you're solving? So remember that business means a problem solving. We discussed this earlier. Now, second question they'll ask you about what kind of a people or a group of organizations have that problems, and how many are there, where are they, and what are the market. That's the reason you should show that this many people. You remember that initial part we discussed about this many people don't use it, this many people don't have an access, these people are looking for one. Now, once you say this one, you say it's already there in the market. So how are you different? So what makes you different? That's another thing. So you need to have a differentiation, and you should tell them now the people are going and buying from that company, and they will shift to me so and so reason. Or you say that company, that there are companies, they are not able to reach out to the consumers. but I'll be able to reach out the consumers because on so reason. So how we are different on that one, we do it. Then definitely they'll ask you how you make money. So you need to have a clear-cut answer on this, how you make money. Maybe customers pay, sometimes your monetization, sometimes your affiliate commission, sometimes your CPM, CPC, CPC, sometimes your dropship arrangement. So you need to have a clear-cut answer and even a real plan. And the original thing is how you make money with that. So this you need to show it. Now, very important question, how you make money for investors. You are taking money from investors, how you are going to do the return on that one, how you generate that kind of a profit to pay to the investors part. Now, how fast you can grow. This is one of the things which I noticed is most of the investors. Sometimes you say yes, sometimes that because actually one of the time when I approached an investor, so when I showed him a 5-year plan, he asked me, I can fund now if you do the same thing in 3 years' time. It was not a right. I said, yes, I can try if I get a more funding. He funded more, but I think it's one of the wrong answer I given, because it's actually, I wanted that to happen. I thought more money comes and things work. As I always say, sometimes more money, more people may not make it. Sometimes you need to wait things to happen. Like I always say that is, to a baby to come out, it takes approximately 10 months. You add a 3, 4, 5 brain to that, will not reduce to 4 or 5 months. And you add more money to that, it again will not reduce it to 4 or 5. Sometimes something to happen, we need to wait. It's not the funding comes and you do faster. Actually, no. So you need to think about how fast you can grow and how fast you can do that one. Okay. Now, sometimes to grow another way, to grow, when you go and talk to the investors, say, I'm growing now at the moment at 30% in annual. If I have a more capital, I can grow up to 50%. You show the next statistics. Now I'm sourcing this much product, my source capacity this much, and I can increase this one. So that's where we need to communicate that. And what is a proprietary? And you need to tell them what you own it in this one. A specialty you have it is what you have it in your control. You have to talk about that. Then what's the traction here made? Tomorrow we're going to spend on a traction. Traction is basically before you go to the investor part, you did some kind of a revenue generated, and that traction is very important. So that shows that your business works, and it can be very big convincing point for investors, your traction. So tomorrow we'll spend a lot of time on a traction and why it is important, and you should have a traction. According to me, have a traction. I seen at the moment that the traction is there, investors are more appealing and investors are more saying yes. Okay. Now, what are the milestones you already? So you say you have a goal document and vision document. You started working on, so 1, 2, 3 quarter. You are in the 4th quarter. They will ask you what happened to the first 3 quarters. So the first 3 quarters you're overachieving is actually really good. So that's the reason your plan, you intentionally can make a smaller goal. Okay. But of course, it should be matching with your financial planning and should be making profit as well. Okay. Now, how we are going to the world. So you should have a real plan. You say SEO, you may be social media, you may be email marketing, offline campaign, online campaign, events, exhibitions and conferences, appointing staff members and opening a branch. We're going for a franchisees, channel partners, distributors, all the things you need to have an answer for it. It's not only part of marketing. So how are you going to communicate? That's one of the primary questions asked by angel investors. Now, you say that I'm generating leads, and the leads conversion happens, and how you're going to close that sales. What are your sales technique on it? So if it is especially online business, that is various things which we discussed about the techniques, right? You will have a urgency you create, right? You will create scarcity you create. So much of things, sales part of the closing that you need to mention to the investors. This is one of the questions they ask. Okay, he's putting my money to generate a lead. When he generated lead, what is mechanism to close? That's a very important, relevant question accordingly. Okay. Now, how are you going to start? Some of your business is not started. How are you going to start? Where are you going to start? That's again a question. Sometimes, that's one of the problems which I have been facing in ADM. So 2 years ago, when I met our founder and we did it, tomorrow I'll share with you how, what are the points he asked me and why he took out so much serious part on it. Now, the problem is actually, so when it's okay, he said last July, he told me he start. So start in his office. And in his office, I had a lot of limitations to start up because we need to, you're not. So now that how are you going to start that portion? I should think, what an important thing. How are you going to start? You may start as incubation. or you start as a pilot, or you start as a learning curve, or you say that is actually I'm starting this preparation on this one and parallelly doing something. So you have a clear question. This is okay. I'll fund you tomorrow. I'll fund you next month. How are you going to start? So you need to have. I'm going to start with so and so activities. You need to answer that one. Now the money which they're investing, most of the investors are interested in what are you going to do that money, and where are you going to invest. So how are you going to spend that money? It's very, very relevant and important question will be asked by the investor part. And you have a team created. What do you think your team is suited for this business? You need to have a proven record. You don't say they look nice or they're beautiful, they are talented or they're good experience. You need to tell them, what do you think your existing team you created is a suit for you? Because most of the time your funding, you'll have a portion going for a salary and you're investing on them. So the investor should have a conviction on that money to pay to that. It's worth paying this kind of a salary for the people who are doing. That's exact. It's also connected with attraction. I'll come to that. We'll discuss in detail tomorrow. And these are the major questions in the first 15. The 30 I split it at two. One is the first portion of the presentation. As you know, the investor meeting, usually not one meeting, 2-3 meetings. So second time when you meet or second time you communicate, they'll have a few follow-up questions like that. Hey, I went through your document. How you came out with this idea? That's one of the most common, because the first time when you present, they liked it. Then they say, well, let me go through. And then they start with a good note, a fantastic idea. So can you tell me how you came out with this one? So you should have a good, relevant, genuine, according to me, a story to tell them. And the reason you came out and the findings for you to come out with this idea is an important aspect. Okay. Now you also think of something, about the presentation, some words you used and some product specification used, pricing you used, all the things they'll ask you back about that one. So randomly do not add something. I just felt like that may not be a right answer. So they ask you, why you put a $399 as a price, or why you think about you name this product after this, or why you're using this as the branding purpose. So you need to have a clear-cut answer for that one. Okay. Now, they will also ask about some competition objections, like a competition or your financial plan and what's your backup plan, especially about the competition. If you think this business goes to them, so you need to have a clear answer how you're going to defend or you're going to work with the competition. But okay, now most of the investors will ask you a question. So far, I noticed that your burn rate is this much. You already burned this much, and so far, who funded you? Sometimes your fund. People really appreciate you're on. I think the angel fund investors, especially, I liked it. They say, this is my own fund, which shows a lot of your commitment, which shows you believe in it. So you say, even you don't have any money. Hey, my friend invested for this. More than that, you say, this much person, even you have a friend invested, say, this much I invested, then my friend invested. All that makes a lot of, that's the reason tractions become very important. And initial part, that's the reason when you go for investors, something which you make it, you have a website, you have social media presence, you have something started making, then going, it makes, that money you bootstrapped and you invested, that makes a very positive things with the investors part. And some cases you have a patent. So your patent investment, so that's one of the things you should be careful. If you have a patent or a trademark or a registration, then think which are the countries you have done. And before investing, they will ask you about it. Okay. Then, as I mentioned, to say your growth part, could you grow faster with more money? So that should be your honest answer. Because it's a good thing is asking, because you should be confident, but not overconfident. You should be realistic on it. And you stick to the plan, because you already given out the business plan. Then unless it's you really feel it is, instead of 20 countries, I can expand at a time to 40 countries. Sometimes it may not be right thing to do, even you have financial resources, as I mentioned. So if this answer, you need to say, no, this much money is the planning, this one, then phase 2, we might think about that way. Okay, this one. Now, your expenditure part is basically every investor has a concern, especially you are flying in a business class. So most of the investors do not appreciate that one. You're staying in a 5-star hotel. Many of the investors don't appreciate that unless you have that requirement. Many of the investors, you show that is, initially first year, even the top level executives of a company, including the CEO, will not take out that kind of an expenditure. And because you can actually easily that investors appreciate that kind of a marketing expenditure reducing part. And even the other part, even sometimes you say I'm operating from home to save the office space, office rent. That investors appreciate, and I'm not using I'm not hiring a higher paid employees now. Once I'm sure about the cash flow, maybe after 3 quarter, 5 quarter, then we go for a senior level of staff member. Again, this, instead of you're depending on other employee, you yourself is putting, actually the investors appreciate on that. Okay, that's an important. Next one is, now they'll also ask you a similar business, or not necessarily competition. They ask how much they're making money, or how many sales they have. For example, you're starting a grocery store, but if they've another website or a textile, they'll ask you, hey, how many sales they're doing. You're starting an affiliate business, but they'll ask you, according to that e-commerce site, is similar, is an e-commerce, how much sales they have. So you should have a little idea, you should do a little research, and that's an important to answer on it. Okay. Now, why you are not investing yourself only such a small money? Hey, I feel it is, you live in a good house, you have a car, and you have sometimes they do a background check, they'll understand you have asset, why you're not funding yourself. So you need to have an honest answer. So some cases, I don't want to risk, that's not the right answer, because you want someone else to risk. So you tell the reason, I don't have a liquid cash now. If I had, then I would not have given a stake, and I would have taken this way. This is an important part. Okay. Now, one of the important things is whatever you put on a business plan document, they will cross-check it as is really practically implementable. They don't ask how we implement it. They'll ask you a question back, the result of that. So how much is the sales you made so far? So that's the reason initial stage is very important to have a kind of a revenue or a sales to create on it. Okay. Now, sometimes you have a partnership arrangement, you have a tie-ups, or you're sourcing, or you are providing to them, or you're supplying to them. So you have a different company. You mentioned these are the things which I'm planning to do. So they will check with you, have you communicated this to the mailer? Have you done this to the mailer, etc., etc. It's an important part. Now, according to them, another thing is, they'll ask you, who else is interested to invest with you? Okay, so did you speak to someone? And sometimes you don't lie there is important. You can, if you don't want to say that is yes, you say yes, I have spoken to a couple of them, but I cannot reveal their names. Confidential reasons, you can always say that. And sometimes you can say that is who else is interested. Yeah, I spoke to a couple of them, and these are the people saying yes to me. Okay, you can do that. And you also, they'll also ask you, okay, your business plan document is confidential, and I like this one. To whom you shown this area or this presentation, who else has seen? Because usually, like entrepreneurs has a network, even investors has a network. They discuss something, they'll have a forum, they'll have a mentors together, they have a mentoring session, they have a consulting session, they have various kinds of platforms. So they'll be discussing that part. So you need to honestly answer them. If you're shown it, tell them, okay. And another important, this is a quite tricky part, because in exchange of, tomorrow we'll discuss in this part in detail, in exchange of kind of a valuation, I mean, in exchange of 20%, in exchange of 10% of the company stake, you are giving out this money. For example, you are raising a capital of $100,000. Then you say, I'll give you 10% of my equity. Then immediately the investor calculate, you valued the company 1 million. The first question they'll ask you, how you derived this valuation. So we need to have a right answer for evaluation aspects. Okay. So this is another aspect on it. Now, sometimes some of the questions are this which you may not be comfortable with. For example, hey, you went to so many people, why others are not investing on this one? This is also one of the things you should be very carefully do that one. Okay. So if these are the usual questions asked by angel investors. Now, even you are not going for angel investors, if you tried this one, answering it as, you have a much more broader picture, much more ideal picture. even you yourself to fund you feel. When you think about it, this is someone else is running this business area. You are going to invest. So think, to you are investing, of course, that's the way, but you're investing. That makes a lot of sense, right? So that's the reason you need to think about answering all these things. So these are the fundamental aspects. Now, tomorrow we will practically split it into another investment as well, actually venture capital, and also how to say different kinds of investors, how we approach, and what are the document you prepare, and how you present this one, and of course the terminologies which we are not elaborated today, that I believe everyone should know certain terminologies, because some of the questions which they ask is basically what is your burn rate. So you should know what is burn rate, and sometime can you give can you provide me so and so document. So you should know that one. So you should know how to talk about traction. So other things is a important part of an investment investment finding methods, or investment related activities, or investment finding or funding and investment related finding activities. This is what's important. So we'll continue tomorrow, especially more about the strategies. Today we did not cover any strategies to raising a capital. So we only said the overall thing, and a few more questions, especially venture capitals or private funders and government grants who's asked you. That also we'll cover tomorrow, and we complete that entire funding and investment part. Then day after tomorrow, go to business plan document, and because of all the things you are communicating to all the people, communicate to through the business plan document, and the pitch deck, and the vision document. This is a 3 document, which also I'll discuss with you tomorrow. What are the things is the most important to that? Okay, so thank you so much. So tomorrow we'll discuss in detail about it, many of the terminologies, many of the methods, and so 2 days is very less for to explain about all the aspects. But of course, tomorrow I'll give you strategies and like a capsule, so you'll easily understand how you can raise a capital. I'll tell you a 3 scenario tomorrow, and how you can do that one, especially with the 100 Days of Challenge program, how we can do even a small and a bigger one. Okay, so thank you so much. So tomorrow we will discuss in detail, and I would recommend to all of you to join in the mastermind group now. Another few minutes, I'll join for that. Thank you so much.